Unlocking the secrets of MGK ETF, Top 30 Must-Know Facts for Investors. What does MGK stand for in the context of ETFs? Answer: B. Mega Cap Growth. Explanation: MGK stands for Mega Cap Growth. The Vanguard Mega Cap Growth ETF (MGK) focuses on large-cap companies with growth characteristics. Which index does the MGK ETF primarily track? Answer: C. Russell 1000 Growth Index. Explanation: the MGK ETF seeks to track the performance of the Russell 1000 Growth Index, which includes large and mid-sized companies exhibiting growth characteristics. What type of investment style is MGK ETF known for? Answer: C. Growth investing. Explanation: the MGK ETF focuses on growth investing by targeting large-cap companies expected to grow faster than the market average. As of the most recent data, what is the primary sector weighting in MGK? Answer: A. Consumer discretionary. Explanation: the consumer discretionary sector typically has the largest weighting in MGK due to the high growth potential of companies in this sector. Which of the following is a primary component of the MGK ETF? Answer: A. Microsoft Corporation. Explanation: Microsoft Corporation is one of the primary components in MGK due to its significant market capitalization and growth profile. What is the expense ratio of MGK ETF? Answer: A. 0.10%. Explanation: the MGK ETF has a low expense ratio of 0.1%, reflecting its cost-effective management style. How is the MGK ETF typically used in a portfolio? Answer: B. To gain exposure to large-cap growth stocks. Explanation: the MGK ETF is used to gain exposure to large-cap growth stocks, which can provide higher growth potential compared to the broader market. What is the typical tracking error of MGK ETF? Answer: B. 0.20%. Explanation: the tracking error of MGK ETF is typically around 0.2%, indicating its performance is closely aligned with its benchmark index. What is the primary advantage of investing in MGK ETF? Answer: C. Exposure to high-growth large-cap companies. Explanation: MGK ETF offers exposure to high-growth large-cap companies, which can potentially lead to higher returns compared to the market average. Which type of investors is MGK ETF best suited for? Answer: C. Growth-oriented investors. Explanation: MGK ETF is best suited for growth-oriented investors who are looking for capital appreciation through exposure to high-growth large-cap stocks. What is the typical turnover rate of the MGK ETF? Answer: B. 20%. Explanation: the MGK ETF typically has a turnover rate around 20%, indicating moderate trading activity within the fund. Which of the following is a risk associated with the MGK ETF? Answer: C. Concentration risk in specific sectors. Explanation: the MGK ETF may have concentration risk in specific sectors, particularly technology and consumer discretionary, which can affect its performance if these sectors experience downturns. What is the historical average annual return of MGK ETF over the past 5 years? Answer: D. 20%. Explanation: historically, MGK ETF has delivered an average annual return around 20% over the past 5 years, reflecting its focus on growth stocks. In which type of account is MGK ETF commonly held? Answer: A. Tax-deferred retirement accounts. Explanation: MGK ETF is commonly held in tax-deferred retirement accounts like IRAs due to its growth potential and long-term investment horizon. Which of the following best describes the MGK ETF's liquidity? Answer: A. Highly liquid. Explanation: MGK ETF is highly liquid due to its large market capitalization and high trading volume, making it easy to buy and sell shares. How often are dividends paid by MGK ETF? Answer: B. Quarterly. Explanation: MGK ETF typically pays dividends on a quarterly basis, aligning with the dividend payout schedules of its underlying holdings. Which financial metric is least relevant for evaluating MGK ETF? Answer: B. Dividend yield. Explanation: dividend yield is less relevant for MGK ETF as it focuses on growth rather than income, and its dividend payouts are relatively low compared to value-focused funds. What is the primary method of rebalancing in MGK ETF? Answer: C. Annual rebalancing. Explanation: MGK ETF generally undergoes annual rebalancing to ensure it continues to track its benchmark index accurately. What percentage of the MGK ETF is typically allocated to technology stocks? Answer: D. 60%. Explanation: The MGK ETF often allocates around 60% of its portfolio to technology stocks, reflecting the sector's significant growth potential. Which investment strategy is least associated with MGK ETF? Answer: C. Market timing. Explanation: MGK ETF is less associated with market timing as it follows a buy-and-hold strategy to invest in growth stocks over the long term. What kind of growth characteristics does MGK ETF focus on? Answer: C. Capital appreciation. Explanation: MGK ETF focuses on capital appreciation by investing in companies expected to grow faster than the overall market. What is the minimum investment amount for MGK ETF? Answer: D. No minimum investment. Explanation: there is no minimum investment amount for MGK ETF itself, however, the brokerage through which you buy it may have its own requirements. Which of the following is a common alternative to MGK ETF? Answer: C. SPDR S&P 500 ETF, SPY. Explanation: the SPDR S&P 500 ETF, SPY, is a common alternative, offering broad exposure to large-cap U.S. stocks, though it is not growth-focused like MGK. How does the MGK ETF's performance compare to the SP 500 index? Answer: A. Typically higher. Explanation: MGK ETF's performance is typically higher than the SP 500 index due to its focus on high-growth large-cap stocks. Which of the following is a feature of the MGK ETF's holdings? Answer: B. High volatility. Explanation: MGK ETF's holdings are often more volatile due to the growth nature of the stocks it includes. What type of financial reporting is MGK ETF subject to? Answer: A. Quarterly. Explanation: MGK ETF is subject to quarterly financial reporting, including its holdings and performance metrics. What is the primary benefit of MGK ETF's low expense ratio? Answer: C. Reduced investment costs. Explanation: a low expense ratio reduces investment costs, allowing more of the investor's returns to be retained. How does MGK ETF's investment strategy impact its tax efficiency? Answer: A. More tax efficient due to growth focus. Explanation: MGK ETF is generally more tax efficient because its focus on growth stocks means less frequent trading and fewer taxable events compared to income-focused funds. Which characteristic is less common in MGK ETF compared to value-oriented ETFs? Answer: D. Stability in earnings. Explanation: growth-oriented ETFs like MGK typically focus on high growth potential and can have higher volatility, often lacking the stability in earnings found in value-oriented ETFs. What is the target market capitalization for MGK ETF's underlying holdings? Answer: C. Large cap. Explanation: MGK ETF targets large cap companies, which are typically the largest by market capitalization and are expected to have higher growth potential.